Good day, ladies and gentlemen, and welcome to the Tesla Motors fourth quarter 2010 earnings call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session with instructions following at that time. If anyone requires assistance, please press star then 0 on your touch-tone phone. As a reminder, this conference is being recorded. And now I'll turn the call over to Jeff Evanson, Vice President of Investor Relations. Please begin, sir.
Thank you, Tyrone, and thank you, everyone, for joining us this afternoon. Welcome to Tesla Motors' earnings call for the fourth quarter of 2010. With me on the call today are Elon Musk, Chairman, Product Architect, and CEO of Tesla Motors, and Deepak Ahuja, our Chief Financial Officer. Before we begin the call, I'll read the following statement to inform you of certain safe harbor provisions under the Private Securities Litigation Reform Act of 1995. During the course of this conference call, we will discuss our business outlook and make other forward-looking statements within the meaning of the safe harbor provisions of the Private Securities Litigation Reform Act of 1995. Such statements are only predictions based on management's current expectations. Actual results or events could differ materially from those predictions due to a number of risks and uncertainties, including those discussed in the Risk Factors section of our most recently filed 10-Q filed on November 12, 2010, and our financial prospectus related to our initial public offering filed with the SEC as amended on June 29, 2010. In addition, any forward-looking statements represent our views only as of today and should not be relied upon as representing our views as of any subsequent date. While we may elect to update these forward-looking statements at some point in the future, we specifically disclaim any obligation to do so even if our views change. Therefore, you should not rely on these forward-looking statements as representing our views as of any date subsequent to today. With that, I'll turn it over to Elon.
Thanks. So, the fourth quarter was just another solid quarter of execution on all aspects of our business, including Roadster, Model S, and Powertrain. The Model S alpha phases went really well. I'm very pleased with that. And the development of the Model S is on track. We did quite well in the Powertrain business with increase in deliveries for and orders for the Smart EV, completion of the development program for the Daimler A-Class, and commencement of the Toyota RAV4 EV development program. We've also added a tremendous amount of talent. I think this is a point that's really worth emphasizing, that the quality of people we're attracting to Tesla is just really phenomenal. I mean, it's absolutely at the best of the automotive industry and of the high-tech industry. I think perhaps one of the best indications of this is if you were to attend a college fair, any one of the college fairs where Tesla is present, and looked at the line at the Tesla booth and compared that to the line at any other booth, including Facebook, Google, Apple, or anyone else, the Tesla line is the longest line at the entire recruiting fair. I think that says a lot. On the Roadster business, they're doing pretty well. It's increased 10% sequentially in revenue, driven by better selling prices and a favorable leasing mix. Despite seasonality, because obviously if people aren't necessarily looking to buy a two-seater convertible sports car in the middle of winter, we delivered 149 Roadsters globally, on pace with the result in a much easier selling environment of the September quarter. We have also increased the order for Lotus, going to a total of 2,500 cars from 2,400. We're not going to increase it anything beyond that, even though there is actually demand that's in excess of doing 2,500 vehicles, because we want to stay true to our original commitment that the Roadster is intended to be a collector's item, a limited edition collector's item. So we're increasing it just by 100 vehicles from 2,400 to 2,500 because we are seeing quite a bit of demand, but we're not going to go beyond that. Yes, but it will allow us to sell a few more units in 2011 and 2012. As far as retail expansion, we opened a new store in Tokyo, where Akio Toyota personally attended. And just recently, last week, we had the Washington, D.C. and Milan store openings. Coming up, we're going to have the San Jose store in Santana Row opening in a few months. And this is going to be one of the first stores that really emphasizes our new model for selling cars. We're not quite prepared to talk about it now, but I think it'll be something that's worth paying attention to in the future. Model S is on plan for first customer deliveries in mid-2012. So really no change from what I talked about in the last quarter, or what we mentioned at the IPO. There would, of course, be a slow ramp in production in 2012, with it reaching steady-state production in 2013, as we've talked about in the past. So as far as the Alpha build, I drive the Alpha build, the latest Alpha build, every week, and I must say I think the car is great, even at this early stage. Although it is a sedan, which is comparable in size to a 5 Series BMW or a Mercedes E-Class or sort of Audi A6, it feels very light and agile on the road, has tremendous power, as you'd expect from a Tesla or from something with an advanced electric motor. So I'm really pleased with how the product is developing. I think this car is going to be the car that, even if it wasn't electric, would be the preferred vehicle among premium sedans. So we completed as scheduled last quarter. So we're driving it in December, and accumulated a lot of miles now. We've actually finished just this week our 15th Alpha prototype, a body-in-white prototype. And last month we exhibited an exploded view of the body-in-white at the North American Auto Show in Detroit. Part of the goal of that show was really to emphasize the quality of vehicle engineering at Tesla, because this is one of the least appreciated aspects of Tesla's capabilities. I think people generally appreciate that we've got the world's best powertrain. They can obviously appreciate the aesthetics of the Model S by looking at it. But we really had to go under the skin to show that the vehicle engineering is just as good as the powertrain engineering and the aesthetic design. It's an all-aluminum body and chassis, and in fact will be the only aluminum car made in North America. The next most advanced car is probably the Audi A8, which is obviously made in Germany, but we feel there are reasons to say that the Model S is actually more advanced and better on the objective metrics of things like torsional rigidity, stiffness to weight, strength to weight, safety characteristics, internal usable volume, that kind of thing, than the A8. So, yeah, it's going really well in that respect. We feel very, very, very confident about having a compelling beta that will be available for test drives this summer of this year. Let's see, with respect to Fremont, our manufacturing facility, this is really a substantially integrated manufacturing facility for the Model S. This includes stamping, plastics, paint and body assembly shops, and manufacturing of powertrain components. This is, we're really taking advantage of an amazing infrastructure that we inherited from Toyota, where they made the Toyota Corolla and Tacoma trucks. So some will disagree with the strategy, but I think vertical integration is a smart move. It allows us to adapt quickly, to rapidly innovate, and also to control our unit costs. This is this is quite important for a small car company because we don't have the leverage of a larger car company. So whereas a large car company could, has leverage with suppliers because they can always say, well, if you don't do a good job on this program, we're going to not give you access to another program or something like that. We don't really have that flexibility or that leverage. So it's important for us to be able to say, okay, if you as a supplier are not going to do a great job for us here, we will insource and have that be a credible threat. The larger hydraulic press line is being assembled in Fremont on schedule. This is really epic. I mean, it's the largest hydraulic press line in North America, one of the largest in the world, and we expect it to be fully assembled by the second quarter of this year. We finalized the Model S production layout, and we're actually going to design it to allow for 20,000 units on a single shift. This is slightly different from our prior plans where we thought 20,000 on a double shift. It's a little bit of extra money spent now. We think it lays a better foundation for the future because it means that we can go to double shift or even say a triple shift and quickly adapt to increased customer demand. Particularly, bringing in something like the Model X. If we want to rapidly scale to sort of an annualized production of 40 or 50,000, then this allows us to do that without having to reconfigure the line substantially. The Model S Alpha powertrain is looking very strong. I don't think this is a risk at all for the Model S. In fact, I think it'll be better than it's better than what I expected. My expectations are very high. So I think this is looking really, really strong. And I'm very excited about the idea of sort of a sport version of the Model S or performance version of the Model S that potentially outperforms something like the M5, which I think would be a great product. Supplier sourcing for production remains on track. Really, it's almost entirely done. I think this is an important data point because one of the questions is, well, is Tesla going to stay on track for the expenditures for the Model S program in terms of total ED&T and all that, as well as does Tesla have sort of a handle on the unit cost? I think having almost all supply agreements done and being able to say that, yeah, we feel good about both of those elements, I think is very important, and that is the case. We have supplies kicked off for equipment and process finalization in the paint shop, which is Giffen and BASF. And I've talked before about how important I think paint is. This is a really, really important detail of the car. On the body shop side, Paslan and EDAG for final assembly, Drift's Web. Tooling supplies kickoff is also underway. We've kicked off tooling for our dies for stampings. That's Fuji is our die supplier. They're hard at work and have been for a few months. As far as Model S reservations, we now have over 3,700 reservations. Bearing in mind that minimum amount for reserving a Model S is $5,000. So it's not like it's a $100 reservation; it's a $5,000 reservation. And we're still dedicating very minimal resources to this effort. It's really going to be around the middle of this year, in the second half of this year, really, when we start to ramp up our sales effort on Model S. Sort of coincident with having beta vehicles that we can give people test rides in. On the strategic relationships, I want to just drill into that a little more. The Daimler business continues to progress well. Daimler has increased their order by 300 vehicles to 1,800 for the Smart. This is the third time that Daimler has increased its order, which was originally just 1,000 units. So I think it shows that there's continued interest from Daimler. And we delivered a record amount of battery packs and chargers in the fourth quarter. As far as the A-Class EV, as I mentioned, development work is essentially done. We're now shipping production battery packs and chargers, so that looks quite promising. For the Toyota RAV4 EV, total development revenue is projected to be about $69 million. In this case, we're providing the entire electric vehicle powertrain, including the motor and gearbox, in addition to the battery, the charger, and software. We've met the first major milestone under the agreement. We've been delivering RAV4 prototypes since July, and we're just about to finalize the production supply agreement. And obviously, Toyota choosing to have Tesla do the powertrain for the RAV4 is a tremendous endorsement. I think really having both Toyota and Daimler, Daimler's the company that invented the internal combustion engine car. Toyota is the largest car company in the world and leader in hybrids, and to have them as strategic partners is obviously a great honor for us, and it really couldn't ask for a better endorsement of our core technology. Then there's also Panasonic. Panasonic, you may recall, has they invested in Tesla late last year, which is great validation. They were also kind enough to state publicly that Tesla has the most advanced battery pack technology in the world for EV applications. We continue to work to optimize the 18650 form factor, specifically for automotive use. This is an important point that sometimes people aren't aware of, which is that the AT, although with Roadster we use an almost unmodified left-top cell, in the case of Model S, it is actually a highly modified cell that has the same external dimensions as the left-top cell, so we can use the automated cell handling equipment, but it is a significantly different internal geometry. This redesign has come at the behest of Tesla, and we're able to transfer those changes to other suppliers. So this is not an exclusive supply agreement that we have with Panasonic, and we do expect to establish a second source for cell supply, given its importance. Although Panasonic, of course, remains our preferred number one sort of cell supplier. So as far as 18650s in general, we see, at least for the next several years, we do not see anything better than an 18650. And for those that think that there's a larger format cell that's better, I would simply ask, what is the cost per kilowatt hour, and what is the energy density? And until some cell supplier comes back to us with a number that is better than the 18650, it would obviously be foolish to use anything except the 18650. It's really as simple as that. Just a little bit of operational guidance. Last quarter, our primary objective was completion of the drivable Alpha prototype. You can see videos on our website of that car doing great carving turns through Southern California. This quarter, our Model S-related activities include just finishing off the fleet of Alphas, doing extensive testing of the Alphas in a variety of climates, testing braking, safety, handling, NVH, and all the rest. We're completing the last release of serious services and pods to our suppliers, and executing detailed readiness plans at each of the stamping, plastics, paint, and final assembly shops. Later on this year, we'll be going into beta build. And the beta build it's kind of like, just standard sort of high-tech term. But, when something's at beta stage, it is almost indistinguishable from the production article, except that, of course, there's still a series of bugs that have to be worked out, and maybe some corner case functionality that needs to be added and that kind of thing. But it's really, what you see at the beta phase is almost identical to what you would receive in production. We're like I said, we feel confident of having our first beta build this summer. So let's see, and then just maybe a few sentences just on the Model X, and maybe clarify a few things on that front before I hand it over to Deepak Ahuja, because there's been a few incorrect things that have been printed. But the Model X is a variant on the Model S platform, so it is a crossover SUV. It's intended to be cooler than any other SUV. That's our aspiration. But actually have functionality that exceeds that of a minivan. So this is a tough goal to achieve, but I think we've got a shot at doing that. That's really what we're aiming for. The pricing would be comparable to that of the Model S. So this is not our sort of third-generation mass production vehicle. That vehicle is still several years away. But the Model X is really just a way of generating potentially twice as much volume in the premium vehicle segment by offering a crossover SUV in addition to a sedan. And we're looking to unveil the design prototype of that at the end of this year. With that, I'll turn it over to Deepak.
Thanks, Elon. The primary takeaway from the quarter is that in addition to delivering on the Model S, as Elon has shared with you, we've continued to improve revenue and gross margin of our existing business. As the December quarter marked the end of our fiscal year, I'll discuss both our quarterly and annual performance and then conclude with some thoughts on guidance. While discussing the financials, I'll provide commentary on both a GAAP and non-GAAP basis. Our non-GAAP financials exclude non-cash charges related to stock-based compensation and change in the fair value of our outstanding stock warrants. A reconciliation of the non-GAAP information is included in our earnings release. Turning first to the P&L, overall revenue for Q4 was $36 million, a 16% increase over Q3, and almost double that reported in Q4 of last year. For the year, revenues were $117 million, up slightly from $112 million for 2009. Given that we were shipping Roadsters against a 2-year backlog during most of 2009, we believe the 2010 performance is a strong result for the company. Let me remind you that we report revenue in 2 categories: automotive sales and development services. Automotive sales consists primarily of Roadster sales and, to a lesser extent, the sales of powertrain components to OEMs, as well as zero-emission vehicle credits. On the other hand, development services revenue consists of services we provide to other OEMs to develop electric powertrain components and systems for their vehicles. Starting with the Roadster portion of our automotive sales, as Elon mentioned, we delivered 149 Roadsters in Q4 versus 151 in Q3. We believe this is a very good result, given that our sales have some degree of seasonality during winter months. Average selling prices increased as compared to the prior quarter. This result, when combined with a lower leasing mix, contributed to a 10% sequential increase in Roadster-related revenue to $20 million in Q4. For the year, Roadster revenues were $76 million as compared to $112 million in 2009. A comparison that is a bit apples to oranges, again due to the 2-year reservations backlog in 2009. Looking at the powertrain components portion of automotive sales, revenues were up almost 80% sequentially to $9 million in this quarter. We achieved our 3rd consecutive record quarter for deliveries of battery packs and chargers for Daimler. As Elon noted, Daimler increased its order by 300 battery packs and chargers for the Smart 42 EV Hence, the total program is now up to 1,800 units. We currently anticipate delivering these components until the summer of this year. In Q4, we also started recognizing revenue from the delivery of battery packs and chargers for the Daimler A-Class program, which we expect to continue through the balance of 2011. It's worth noting that our revenue per unit for the A-Class battery pack is roughly double that for Smart 4.2, which is in proportion to the increase in the size of the battery capacity. For the year, powertrain revenue was $22 million. This portion of our revenue stream was negligible in 2009, since we had just started shipping production powertrain components in Q4 of 2009. Overall, automotive sales revenues increased sequentially by 25% to $29 million, which we believe is a strong result. And on a full-year basis, automotive sales revenues were $97 million as compared to $112 million in 2009, again due to higher Roadster sales in 2009 to clear out the two-year reservations backlog. Turning to development services revenue, decreased sequentially by 10% to $7 million in Q4, primarily due to the completion of the Daimler A-Class development program during the quarter, but this was partially offset by work underway on the Toyota RAV4 EV program. After agreeing on the final specifications of the RAV4 EV during Q4, we now have the opportunity to earn up to $69 million in development services revenue as we execute on our deliverables. We currently anticipate recognizing this revenue over the next 4 to 5 quarters, given Toyota's stated intent to enter production with the RAV4 EV in 2012. And just as clarification, the sale of production parts for the RAV4 EV will be part of a separate agreement which has not been finalized yet. On a full-year basis, development services revenue in 2010 were $20 million. The comparison with 2009 is not meaningful here, since we started recognizing revenue for development services only in Q1 of 2010. Total gross margin for the quarter was a record 31%, as compared to 30% last quarter. Gross margins increased across all revenue lines, showing great execution by our entire team. Gross margin from our automotive sales was 20%, as compared to 17% in Q3, the highest we have ever achieved in any calendar quarter. This was due to a combined focus or a continued focus on both average selling prices and cost reductions. Gross margin for development services was 78% in Q4, as the timing of revenue recognition did not fully match the period in which we booked the underlying cost of revenues. This mismatch was further heightened in Q4 with the completion of the A-Class program and the start of the Toyota development contract in the same period. Remember that this gross margin for development services is not an indicator of future performance due to these timing differences. Total gross margin for the year increased from just 9% in 2009 to 26% in 2010. While this increase was partially driven by a change in mix between the automotive and development services revenue, we also increased automotive gross margin from 9% in 2009 to 18% in 2010. This shows the extent of improvement we've been able to achieve in both our Roadster and powertrain activities. We are intent on keeping the same discipline on the Model S program as well. Our operating expenses continue to reflect continued emphasis on the development of the Model S and our spending on infrastructure. R&D expenses were $38 million for the quarter on a GAAP basis and $36 million on a non-GAAP basis. Non-GAAP R&D expenses increased 40% sequentially, primarily due to expenses related to the Model S Alpha prototype build and one-time relocation expenses of our vehicle engineers from LA to Palo Alto. We also had higher production and engineering headcount that grew by 15% during the quarter, and the accelerated completion of engineering work underway at several suppliers. We expect quarterly spending in 2011 to increase moderately from the Q4 level as we continue to execute on the Model S program, and the spending may be lumpy in some quarters. SG&A expenses for the quarter were $25 million on a GAAP basis and $20 million on a non-GAAP basis. The 9% increase in our SG&A expenses on a non-GAAP basis from the prior quarter is due principally to the growth of our sales and marketing activities and headcount to support the continued growth of our company globally. We expect quarterly SG&A expenses in 2011 to increase slightly from the Q4 level as we continue this global expansion. This will be offset by our continued cost control in G&A. In summary, we are closely monitoring expenses and have strong controls in place to ensure that our spending is tracking to our plan. We are incurring a net loss despite improved margin and will continue to do so for the next several quarters while we are making significant investments in R&D and our infrastructure to launch the Model S. Net loss for the fourth quarter was $51 million on a GAAP basis. This loss included $8 million of non-cash stock-based compensation, of which $3 million related to a Model S-based performance grants, reflecting a higher probability of achieving future milestones. Without these expenses, the loss in this quarter on a non-GAAP basis was $44 million, or 47 cents per share, with 94 million weighted average common shares outstanding. For the year, net loss per share was $3.04 on a GAAP basis and $2.53 on a non-GAAP basis, with 51 million weighted average common shares outstanding. As a quick note, we expect that most of our interest expense will be capitalized until the start of production of the Model S, since the DOE loan is being used to build out the Tesla factory in Fremont. Turning now to the balance sheet. Total cash, including our cash in the DOE dedicated account, was $173 million at the end of the quarter. This compares to total cash of $185 million at the end of the prior quarter. Combining total cash with the remaining DOE facility, we had capital resources of approximately $566 million available as of the end of the year. We currently anticipate that this will be sufficient to fund our operations through the launch of the Model S based on our present plans. Looking at cash flows for the quarter, operating activities consumed $34 million as compared to $46 million in the prior quarter, despite a higher operating loss in Q4. The majority of the cash used in operating activities during Q4 is reimbursable under the DOE loan as it relates to our expanding R&D spending. Our inventory continued to grow to support our Roadster and powertrain sales, but at a slower rate than the prior quarter. Over the next few quarters, we expect inventory to continue to rise as we have elected to build Roadsters at a faster pace than our sales forecast, given that Lotus production of Roadster gliders will stop just after year-end 2011, and we intend to continue with Roadster sales in 2012. Capital expenditures were $24 million in this quarter as compared to $67 million last quarter. Recall that last quarter's numbers included $56 million related to the acquisition of the Fremont facility. Over the last 2 quarters, we have made opportunistic purchases from the old NOMI operations, particularly in stamping and plastics, which is allowing us to insource a greater number of parts where we believe it makes good business sense. For the full year, we invested approximately $105 million in CapEx. This was lower than we anticipated, mainly due to timing. We expect that this deferral in spending will now show up in 2011. Offsetting our cash usage in the quarter was the drawdown of $15.3 million from our DOE loan facility at interest rates under 3%. Since the end of Q4, we have drawn an additional $15.6 million from the DOE loan facility related to our Q4 spending. As shared with you earlier, the DOE funds half the expenses up front and the remaining half on a deferred basis. Next, I'd like to offer some thoughts on guidance. Since we remain focused on the long-term objective of delivering the Model S on time and at planned profitability, we are providing full-year financial guidance for 2011. We project revenue to increase by about 40 to 50% in 2011 to a range of $160 to $175 million. We expect Roadster sales to grow over last year, but still expect some seasonality during the winter months. The total Roadster program, as Elon mentioned, is now 2,500 units, and we have delivered over 1,500 so far. Thus, to the extent we exceed planned Roadster sales in 2011, we might not be able to meet all the Roadster demand in 2012. As Elon mentioned, 2011 should be our biggest year for capital spending for the Model S program, as we will purchase most of the tooling and manufacturing equipment required for production. Looking at all of our capital expenditures for the full year, we expect to invest about $190 to $215 million. Remember that the majority of these capital investments should be reimbursable under the terms of our DOE loan. With this level of CapEx spending, we can execute on our strategic decisions to increase insourcing, primarily in stampings and plastics. We've also elected to invest incrementally in new technologies, primarily in our paint and body shops, to produce even higher quality at affordable costs. Furthermore, we are investing in additional plant automation, as Elon mentioned, to expand capacity to produce up to 20,000 units on just one shift. This has about a one-year payback in terms of saved labor and overhead costs. The strategic benefit of this decision is that it also accommodates either higher Model S production or the efficient introduction of future models, such as the Model X. Finally, as we have concluded negotiations with most of our suppliers, some investments planned for 2010 have been deferred into 2011, while others have come in at a slightly higher cost over plan. Please remember that all depreciation of our capital expenditures related to the Tesla factory will begin after the start of Model S production. Moving on to Model S reservations, we have received slightly over 3,400 Model S reservations as of December 31 and have now surpassed 3,700. We plan to disclose this number of refundable reservations received during these earnings calls, but will not provide future guidance on this number. Since we are not actively focused on getting Model S reservations at this time, we do not regard the number of new Model S reservations received in any given quarter to be an indicator of our performance, at least for the next year or so. I'd like to conclude in summary by reinforcing that we continue to be excited about our long-term opportunities. This ends my prepared remarks.
Okay, analysts, and just a quick note to all of you and our investors as well. We just want you to note that when comparing our results to what services such as Thomson Reuters present as consensus expectation, that these services are reporting a 2010 annual loss expectation of $2.23 per share. And clearly this is incorrect, since even before this quarter, we'd already reported a year-to-date loss of $2.50 a share. We think this discrepancy appears to be driven primarily by a misread of the sell-side analyst models, and that may be attributable to the difference between past, actual, and pro forma share counts. So, analysts, we ask you to please make sure that going forward, the consensus service providers actually accurately reflect what your expectations are. So with that, Tyrone, let's now open the call for Q&A, please.
Yes, sir. Ladies and gentlemen, if you have a question or comment at this time, please press star then 1 on your touchtone phone. If your question has been answered and you wish to remove yourself from the queue, you may do so by pressing the pound key. Again, if you have a question or comment, please press star then 1 on your touchtone phone. Our first question is from Dan Gobbs of Deutsche Bank. Your line is open.
Thanks very much. Congratulations on a good quarter. Can you guys hear me? Okay, great.
Yep.
Just wanted to, think about how should we think about cost expectations, how they've changed for the Model S over the last, couple quarters in terms of raw material, changes to raw material pricing that you've seen in the market. It sounds like this investment in automation for, 20,000 units on one shift is a cost reduction, but as you've gone through the supplier sourcing process, how have your cost expectations, unit cost expectations, changed for the Model S?
Well, I just see one here. So I think that they're in line. So I mean, there's always a little bit of fluctuation in the cost of a car. But it's really we feel pretty confident of being able to achieve. I'd say really good margins on the car. There are some. I mean, there's slight sort of issues of maybe currency risk among some of our suppliers, or some chance of raw materials going bonkers. I mean, those things can affect costs. But overall, I feel good about achieving the 25% gross margins that we think we can achieve with the Model S. So I'd say it's really reaffirmed our ability to do that.
Okay, thanks very much. On the vertical integration strategy, you talked quite a bit about. Is there any part of that essentially the timing of validating some of your processes? Could there be a chance that you get to the point where you want to outsource a part of the vehicle production, and do you have backup plans, or is there any part of that vertical integration strategy that could really change the timing of the Model S launch if it didn't work the way you thought?
No, it's actually intended to do the opposite, which is to reduce the risk of having one or two suppliers that cause a delay in the deliveries of Model S. The basic philosophy in sourcing is to, if we need to be able to do almost anything in-house. So we don't expect to do everything in-house. That would be foolish. But to have the ability, to have that optionality to say, worst case scenario, we can crank 24/7 internally and make that part ourselves is incredibly powerful. And I think also helps keep suppliers honest if they know that we have that ability. Because sometimes what can happen is suppliers will wait until quite late in the game before trying to raise costs on you, or do some kind of bait and switch, or tell you that, or reveal that they really can't deliver. I've seen that so many times, and being able to rally the troops internally and solve that problem is I think very, very important for controlling one's destiny.
Okay, and just one other quick one. Can you give us an indication of incremental investment for new top hats and potential timing for those vehicles after Model S?
Yeah. Bear in mind these are just rough approximations, so I wouldn't treat this as gospel or anything. It's but for something like the Model X, we're thinking it's between 100 and 150 million total capex. Hopefully, we'll try to do it at the lower end of that. But even if it's at the higher end of that, I mean, it's a ridiculously good return on investment. So it's like an obvious move.
Okay, thanks very much.
All right, thanks.
Thank Thank you, sir. Our next question is from Joshua Paradise of Morgan Stanley. Your line is open.
Hey, guys. Congratulations on great execution, and thank you for taking the question. You talked a little bit about the battery chemistry that you're developing with Panasonic. So I guess, is the chemistry that you're going to use in the Model S, at least in the first version of the Model S, finalized, or is that still under development or refinement?
It is finalized in the broad brushstrokes. There are a few finesse items that are little details that will continue to be optimized over this year. But there are no major outstanding question marks. We're very, very pleased with the results we're getting in our test packs. I think people will be pretty impressed with the results. I think it's as far as I can tell, it's more than what anyone thinks is possible. So.
Okay. And can you give a little bit more information on what you're refining? Is it the chemistry? Is it the internal geometry? Is it something else?
Yeah, all of the above. Yeah, so there have been some tweaks to the internal chemistry, a lot of tweaks to the internal geometry, and it's fairly proprietary, so we can't talk about exactly what they are. Of course, I mean, as soon as we have the car on the road, somebody's going to buy a car and then do a to start dissecting the pack and the cell, but we'll leave it to that point before they know what exactly we've done.
Right, and then in the past you've talked about potential agreements with other OEMs. Obviously, you have a strong agreement with Toyota. You have Daimler. Can you give any update on where you are with discussions with other OEMs?
Yeah, we are. I'd say we've had some recent significant discussions with OEMs. I mean, with other OEMs besides our two main partners. I mean, we do need to be a little cautious about engaging another big OEM deal, co-development deal, right now, given the importance of the Model S program and focus on that, as well as making sure we do a great job for Daimler and Toyota. I mean, I think we definitely have our hands full right now. I think we want to make sure, particularly with respect to the RAV4 development, which is a very intense development program this year, that we do a really great job for Toyota. And then, like I said, for the Model S as well, which is kind of our mainstay. So think of it like it's not as though there aren't deals that we could do if we wanted to do them, but we have to be, make sure we don't bite off more than we can chew.
All right. Okay. Thanks so much.
All right. Thanks.
Thank you. Our next question is from Patrick Archambault of Goldman Sachs. Your line is open.
Hi. Good afternoon, everybody.
Hi.
I guess a couple questions. On the CapEx spending, I think you had said 190 to 215 for 2011, if I got that right. Deepak, how does that compare to what you had originally envisioned for the year? And, maybe could you tell us a little bit about, some of the variances, what was timing, what's increased vertical integration, what's maybe just, cost that is, a little higher than you guys had budgeted?
Pat, it is higher than our initial numbers, but for very good reasons that we have fully vetted out and understood. And as we said, Elon and I have discussed, I think it's all strategic, related to what makes sense for us to in-source, particularly in stamping and plastics. What makes sense for us to go invest in better technology to get that high quality in the paint shop, to get that perfect fit and finish in our body shop. What makes sense for us to spend that extra bit of money and get the 20,000 units on a single shift and get a quick payback, which helps us to achieve our total profitability. And I think the bottom line of all of this is that we have sufficient sources of cash on hand. As I mentioned, the $566 million between cash and the DOE loan facility, that we feel comfortable about completing the Model S program with that funding in place.
Yeah, in fact, I'd just like to reemphasize what Deepak just said. Even if we raise no additional funds at all, we have sufficient availability of capital to complete the Model S program and reach profitability. I think this is perhaps I just want to be really explicit about that. Now, I think that there is a likelihood, in fact, arguably even an expectation that we will raise some incremental capital for the Model X program. But that would be kind of maybe towards the end of this year in terms of timing. It's not like in the immediate future. I think we wouldn't do it any sooner than after the Model S beta is unveiled. So people perhaps can feel, can sort of get a more direct sense of what kind of products Tesla can deliver and are they really great products or not. That seems like the sort of soonest timing that we would do it.
And on that note is kind of the incremental capital that you'd be looking for the Model X program. Would that be sort of in the zip code of what you outlined to Dan there? I think you had said 100, 150 or something.
Yeah, it would be probably in the order of 100 to 150 type of thing.
Okay. And on the beta prototype, when do you guys actually start testing on that for safety rating purposes?
Oh, actually, well, the safety stuff is already underway with the alpha prototype, that testing is then used to calibrate crash simulations, and then we make modifications from those safety tests that have been done with the alphas. There's a slight design iteration going to the betas. So just to be clear, that crash testing is actually going to start very shortly, and we've already started safety testing of doing things like the ABS brakes testing, which is underway with Bosch. And that was an important milestone because we need to get cold weather ABS testing underway, which is great. That's happening now. Then there's going to be another period of intense crash testing for the betas starting towards the end of summer. And then more crash testing that takes place once we have our release candidates. Because the beta is, call it sort of 98-99% production design, but it isn't entirely made with production tooling. So we have yet another confirmation step with the release candidate articles, which would be kind of in the roughly 11-12 months from now. And that's just to confirm that the process used to manufacture the cars results in cars that are consistently of the design intent. So there's a whole lot of crash. There's a tremendous amount of crash testing taking place. Because our standard what we're aiming for here with Model S is pretty extraordinary in terms of safety. We're aiming for sort of all-around 5-star rating by 2012 standards, which is a very high standard to meet. A car that was 5-star by 2010 standards would be a 3-star in 2012. So this is important to appreciate just how high a bar it is that we're aiming for. Or we can miss that standard by a mile and still be better than other sedans on the road. So, but we want to be the best. So that involves a lot of crashes, unfortunately. So we have to do them, but it is sad to see so many cars getting mashed up. But this is extremely important competitive dimension. And certainly, I'll have my family and my friends' families. I want to make sure that we can say that there isn't a safer car on the road. Sorry for the laborious answer.
Gotcha. I guess, one more question related to that, actually. Is the release candidate, can you talk us through, is that what happens? You have kind of an assembly tooling product that you released in NHTSA, and that's when you get your final rating, and that happens sometime next year. Is sort of that the way to think about it at the end of your internal testing process? Is that how it works?
Yeah, I mean, well, in the U.S., it's kind of a, I guess, a self-certification process. I mean, you conduct the tests, you compile the data, but then your tests aren't chaperoned by others. This is different in Europe. The tests are chaperoned, so we'll be doing these tests both according to U.S. and European specifications, but because the Model S is designed to a superset of those requirements. So it's actually it's more of the, in terms of witnessing stuff, it's more on the European side. But yeah, it's basically, alpha is about validating calibrating the crash simulations, to the computer models match what we see in reality. Is there anything that we learn that's perhaps not captured in the simulations? And then we do an iteration, go to beta. In the beta phase, we sort of confirm the corrected design. So there'll be some sort of minor iterations in the beta phase, and then the release candidate phase is really just confirming that we've been consistent in the way that we manufacture the vehicles.
Gotcha. One last, just a small modeling thing. Can you tell us how many battery units you sold for the quarter?
I don't think we have publicly shared that information so far, Pat.
Okay. How about ZEV credits? Do you have that handy?
I think we do mention that it's about $800,000 in Q4.
Yeah, and just on the ZEV credit front, for the Model S, our margin assumptions depend, only very slightly on ZEV credits. I think it's only like a few percentage points or something like that.
And it's broader than ZEV credits.
Yeah.
It's global, and it's any other trading of credits that may be happening in Europe.
Yeah. That said, we are seeing a little more interest in ZEV credits than we previously thought might be the case. But we'll see. We don't know if that's going to materialize or not.
Great. Thanks a lot, guys.
Thanks.
Thank you again, ladies and gentlemen. If you have a question or comment, please press star then one on your touch-tone phone. Our next question is from Andrea James of Doherty & Company. Your line is open.
Guys.
Hey.
A question about some of your OEM partnerships. Can you tell us a little bit more about what Daimler was thinking with upsizing the number of battery packs, and is there a possibility of you guys getting a production contract on that?
Yeah. Well, I can tell you what I think Daimler thinks, but they'd be obviously the best entity to comment on this officially. But they're just seeing a lot of interest in the Smart EV. People really like it, and cities around the world are clamoring for it. So that's why they've increased the sort of test fleet size and length. I think that's the rationale there. As far as the kind of the larger production deal for smart battery packs, they're going through sort of a detailed RFQ preparation process right now. We certainly think that we're in an excellent position to win such a contract. I don't want to be presumptuous, but certainly we're in an excellent position. I mean, our pack is in the test fleet, so any other alternatives would have to. Well, I'm not sure what testing process they'd have to go through, but it would certainly be behind whatever we've done. So sort of stands to reason that if the test fleet is using our pack and charger, that kind of gives us, arguably pole position in a production situation for Smart.
Yeah, for sure. And as far as the A-Class E-Cell, I think you had said something in your commentary about, you mentioned production. Can you just, I didn't quite understand, and I didn't realize that was production yet.
Sorry, could you repeat that question again?
Yeah, I guess, Elon, you had said something about the A-Class you started delivering I thought you said production battery packs. Is that a production contract or is it still development?
Oh, well, we call it, sorry, just to clarify, we call it production battery packs because the development contract's over and now we're providing them battery packs for their test fleet, which will primarily be running in Europe.
Yeah, called perhaps small-scale production versus large-scale production. It's production by Daimler standards because you have to meet all of the, very intense safety and reliability standards of Daimler, even for a test fleet. So Daimler regards it as production because they hold the same standard they would hold a much larger production level.
Okay.
Yeah.
That explains it. And then about the Toyota upsize, that you said 69, and I think before it had been 60. Is it just that you're doing more for them now? It's a bigger contract than before?
No, let me just clarify. We signed an initial contract in Q3 for $9 million to provide them some initial prototypes, and later on we followed that up with a $60 million in Q4 for the development contract, which is broader in scope, and it meets completely the specifications that they want. So that's the combined $69 million.
Okay. And then my final question is just on the Model S distribution. When can we hope to hear more about, I guess your store rollout and what your plans are there?
Well, I think there's two parts to that. One is kind of the schedule of store rollouts, and then the other is the refinement of the whole purchasing and servicing process, the sales and service process for automotive, because we're trying to innovate significantly on that dimension of the auto business, which is, I think, historically has been rather poor. I mean, a lot of people would regard their car buying experience as the worst retail experience they've had. Not always, but a lot of people would say that, and in fact have said that to me. So we want to make that. We really want to change that so that you really look forward to buying a car, and that you actually would come into a Tesla store to sort of just browse around and kind of see what's happening, even if you weren't specifically in the mood to buy a car right at that moment. We want to be really inviting, essentially. And the first prototype of that experience is going to be the Santana Row store in a couple months. But it is going to take us a little bit of time to refine that process, or refine the experience. So I think you'll really start to see that kind of develop over the course of this year. And as far as the rollout is concerned, right now we're making sure that we're identifying locations in key metros for Model S, and beginning kind of the long lead process of lease negotiation and permitting and that kind of thing. But we're going to try to avoid applying a ton of capital to it too far in advance of the Model S sales, because we really won't have any trouble selling the first, the 2012 production of Model S. In fact, 2012 production of Model S will probably be sold before. I mean, let's make this prediction, but I think I'm reasonably safe in doing so. That our 2012 production of Model S will be sold out before 2012 starts. I think that is a very likely thing to occur. And so obviously there's a need to have a huge number of stores because, well, we've already sort of they'll be selling cars for delivery in 2013. So really you'll see like the big ramp in store locations and whatnot for Model S in 2012 rather than 2011, in preparation for really driving sales in 2013. I think that's kind of a sensible strategy.
Thank you so much. That's all for me.
Thanks.
Thank you. Our next question is from Ben Callow of Robert W. Baird. Your line's open.
All right, thanks for taking my question. So could you guys talk about your strategy, if you have one, at this point about entering developing markets? So do you plan on developing market-specific car models, or would you do this alone or with a partner?
You're definitely by developing markets. I think you may be thinking of like the BRIC nations. I mean, well, China's arguably not a developing market at this point, but are there particular markets that you have in mind?
Yes, the BRIC markets.
Okay. I think really of those, China is by far and away the most significant. Given that new cars delivered in China are now greater than that in the U.S. That could shift as the U.S. economy improves, but that certainly has been for last few quarters. So we're thinking that entry to China would be in kind of the 2013 timeframe. As I mentioned just a moment ago, we're just in our existing markets, we'll have covered all of the demand for 2012. I should say, we'll have demand in excess of the production of 2012, and probably have pre-sold 2012 by the end of 2011. So therefore, getting to markets beyond that is kind of only important really in the 2013 timeframe. So that's logically when we would go to China, we would go direct. So it would be just Tesla, not a local partner.
And so, as you modify your models, if you need to enter those markets, do your costs increase, or how do you view costs by entering those different markets?
Yeah, we don't anticipate significant modifications apart from local language related stuff. And there's sort of small homologation changes that need to take place. But just as Mercedes doesn't modify their S-Class significantly by market, or BMW doesn't modify their 5 or 7 Series, or Maserati doesn't really modify their Quattroporte, then I think we would likewise not significantly modify the Model S. There may be, like long term, there may be market-specific models that we bring out, but I don't anticipate that in the next few years.
Great. Thank you very much.
Thanks.
Thank you. I'm showing no further questions or comments at this time. I'd like to turn the call over to Elon Musk for any closing remarks.
Thanks. I don't have any closing remarks. Good questions. Appreciate everyone's time on the call.
Okay, thank you, everyone. We look forward to seeing many of you on Wednesday, March 2nd in San Francisco at Morgan Stanley's Technology, Media, and Telecom Conference, where Deepak will be presenting. Thank you.
Ladies and gentlemen, thank you for your participation in today's conference. This concludes the program. You may now disconnect and have a wonderful day.